What's going on, everyone? Good morning. I hope you guys had an amazing weekend. I hope last week was spectacular for everyone because we did get the pop that we were looking for in the market. But this week, it doesn't look like we could be that bullish. Okay, so in today's video, we're going to go over exactly why I think the market might correct a bit. We're going to go over the stock market, the bond market, and the crypto market. Okay, if you guys enjoy the content that I'm putting out, please make sure to subscribe to the channel, put on post notifications, and honestly, I am very, very thankful for all of the new support and like everyone that is following and watching the content. I hope I'm helping you guys. So yeah, without further ado, let's get started with the video. So here is where the bearish news begins. All right, so on Friday, more than 130 countries agreed to set a minimum corporate tax of 15%. All right, now currently the US has a statutory rate of 21%. But if we look at most of the tech sector, which is the NASDAQ, right, many of these companies are not even paying the 15% international tax rate that was just agreed upon. So that is not a good sign for the NASDAQ, especially given the fact that most of these NASDAQ companies are not paying 15% in taxes. So because the NASDAQ had such bearish news essentially with that tax rate increase, the 30-year yield began to fall. So the 30-year yield closed below multiple important levels of support here. And if it continues falling, and this news essentially, investors and hedge funds, banks, etc., they start lessening their positions in the tech sector because of this tax rate, this will continue to fall, and essentially this is not going to be good for the NASDAQ or the overall market. Because if the NASDAQ begins to fall heavily, then the overall market will follow because the NASDAQ is so heavily weighted in the overall stock market. So we could do a bit more analysis on the 30-year bond here. You can see that the MACD has not even crossed down below, but we've closed twice below this level of support. Okay, so that's number one. It's very, very bearish. Number two is we haven't even gotten oversold on the RSI yet. Number three, the lower level of the B band is much lower than it currently is. So we are far away from being very, very overextended to the downside, which is not a bullish sign. All right, that means that there's still tons of more room to the downside on the 30-year bond. And if that's the case, then there is also going to be tons of downside room for the NASDAQ. So usually what we want to see is as we fail support, we want to see the MACD and the RSI quickly become very oversold. But as you can see, this MACD line has not even crossed down below. So that is, that's very, very scary. So this is the 30-year bond. If the 30-year bond goes down, then the NASDAQ goes down. If the NASDAQ goes down very, very heavily, then the rest of the stock market goes down. Okay, so the 30-year bond is very, very important to take a look at right now. But also, let's go ahead and take a look at the SPY, right? So the SPY, it failed to cross above this 50% fib level at 440, right? And it also failed to close above this uptrend channel that we created, this blue channel, right? And we also basically failed to close above yesterday's close. So three separate bearish readings here on the SPY, right? And another thing that we have to take into consideration is the MACD is now extremely overbought, yet the price action of the stock is not bullish. So this is a huge discrepancy. So usually when the MACD is this overextended, we do tend to see a bit of a retracement in the price of the stock. So if that is the case, then 436.66 can potentially get broken, and then the next level of support to the downside is going to be around 434 to 435 on the SPY. So I mean, yeah, this is just not bullish price action, and of course, it's taking into consideration the huge downside move in the bonds, which is why the overall stock market in general were all red on Friday because of the bond movement. So the SPY clearly looks bearish. All right, let's take a look at the NASDAQ now. The NASDAQ also looks bearish. You can also see that the MACD is very overextended to the upside. The 38.2% fib level also was broken. You know, we had support, and remember I bought into lotto puts expiring Friday because I didn't feel that this move to the upside was justified, because I saw the weakness in the 30-year bond. But this move in the equity price, I felt, was just a relief rally because of all of the dip opportunities here. So this was a good opportunity for investors to sell their calls, essentially, take profit on these dips. And then, you know, if the market begins to tumble again, this was a good opportunity to load up on shorts. But I didn't load up that heavily. I just bought into lotto puts. All right. But essentially, the next downward target on the NASDAQ is going to be 358, which is this 23.6% fib level. If that breaks, then we can go and retest this uptrend blue line here. But that all depends on the 30-year bond's weakness. So to wrap things up, you can see the NASDAQ is trading below the 38.2% fib level, whereas the IWM now is trading above the 38.2% fib level at 220. You can see that it's trading here. It just crossed below the 50% fib level. So this is telling us the IWM is stronger and it's outperforming the NASDAQ in the short term. And the reason for that is because the 30-year bond is the weakest, which means that the NASDAQ is the weakest indice. And the 10-year yield is skyrocketing, right? So when the 10-year yield is this bullish, the IWM usually is the most bullish and the leading indice. So that's why we see the IWM showing the least weakness in terms of price action here. We can still see it's above 220, but if it was so essentially similar to Bitcoin and Ethereum, right? If Bitcoin is like at 55k, but then Ethereum is lagging behind, essentially this is what's going on with the IWM and the NASDAQ. The IWM is leading, but then the NASDAQ is showing the most weakness, right? So in terms of where the NASDAQ would be, the IWM should be trading, you know, down here, essentially. But, you know, the NASDAQ is the weakest and it's instead trading down there, right? So the IWM needs to hold 220. 220 is a very, very strong level of support. You can see on the MACD, we did cross above a bit here on the MACD, right? But it's not as overextended as the SPY or the NASDAQ. And in terms of the, you know, the price action and the RSI, we're still showing some sort of bullishness because the RSI did move lower, but we're holding above 220 support. And of course, you know, 218 is a very, very important level for the IWM. So essentially, if these two important levels hold, right, the upside resistance is going to be this trend line and essentially 222. So if we can cross and close above on Monday, right, if we can close above 222.30, that is going to be very, very bullish for the IWM. But of course, you know, it all really depends on the 30-year bond and the overall weakness in the other two indices, namely the NASDAQ and the SPY. All right, so you can clearly see the NASDAQ and the SPY showing complete, you know, not strength at all in the MACD or the price action, and the IWM showing a bit more resilience in terms of support. But of course, the MACD does not look good either. So overall, the whole indices market does not look good because of this tax rate. So essentially, we need to see if those levels of support hold, and then it's just a matter of trading it on the shorter term timeframes. So there's the analysis on the stock market currently. Let's go ahead and take a look at the crypto markets. So Bitcoin is currently holding very strong here, similar to what it was doing early October, where it broke above 48k and consolidated very, very shortly, and then it, you know, broke up higher. That seems like that's what wants to happen essentially on Bitcoin. We are consolidating just for a bit. We might end up retesting 53k, but then, you know, we might end up just continue breaking on higher. That's what people are expecting. But when people expect this, usually the opposite tends to happen. And essentially we just need to see if 53,000 holds. If we come back to retest 53,000, that is going to be the first level that people are going to start to get long. And then the next level that people are going to want to start buying dips on is 51,500. So, you know, there's multiple places that we can buy the dips here. The MACD is crossing down below, yet the price action is bullish. So this is a bullish divergence here on Bitcoin. If we look at Ethereum now, Ethereum is now oversold on the MACD and it's holding above support. So that is also very bullish. We're holding 3,500 pretty well on Ethereum. And essentially, you know, Bitcoin is obviously leading. So as Bitcoin continues to hold up, you know, it could be a good opportunity for alts to start running. And then if alts start running, you know, Bitcoin can use that time to consolidate a bit and then begin running afterwards. So if you guys enjoyed this video, I hope you guys understood what I was talking about in terms of the bonds and everything like that. Bitcoin does look like it can retest 100K by the end of this year, to be honest, or we can retest new highs by the end of this year at least. And everyone is very, very bullish for the crypto space towards the end of the year. Okay, so we just need to see what happens now. But you know, Bitcoin was an anti-inflationary investment. That's where a lot of people began investing in crypto because they saw the just the inflation, and it was a safe place to store money when the monetary system would potentially collapse. But if we're seeing all of these companies not paying taxes, inflation increasing, you see commodity prices increasing like crazy, for example, crude oil, things like that. And then you also see gold and silver underperforming crypto and Bitcoin. Then it becomes a very, very strong use case for banks and hedge funds to buy into this and then run up the price very, very dramatically. And if retail investors do not get in as these dips, etc. happen, then, you know, retail, say for example, like what would be a better price to get into Bitcoin? At, you know, if for example you think Bitcoin is going to go to 100,000, right? Would now be a better price to get in, or would 75K be a better price to get in? The issue with retail is that many retail investors don't know what's going on in the market until the news or media, or it's become much more mainstream, and then by then it's much more easy to manipulate the market and make people lose a lot of money. And then it would just be a repeat of when Bitcoin hit 20K. You'll have a bunch of people buying in all in at like 17K. They're up, you know, 3K in a matter of a few days, and then the market collapses to 10K and they lose all of their money and hate crypto forever. But us, we try to learn and see what's going on before things like that happen. So if you guys enjoyed the video, if you enjoy my content, please make sure to subscribe, hit the like button, put on post notifications, and I hope you guys have an amazing week. We're gonna have an amazing week and it's gonna be spectacular. All right, so have an amazing Sunday, and I will see you guys tomorrow. Thank you.